Hello, everyone, and welcome back. If you're keeping a close eye on economic developments for your UPSC preparation, perhaps for mains or even prelims, we've got a really crucial update to unpack today.
That's right.
We're diving into India's latest trade figures for the financial year 25. Our source for this is the Indian Express. And this isn't just about, looking at the headline numbers. It's about understanding the shifts, the dynamics in India's global trade.
Exactly. We need to pull out those vital insights.
Yeah.
We'll be looking at the U.S. solidifying its place as India's top trading partner,
Right.
but also critically, that widening trade deficit with China.
Yeah, that's a big one.
And we'll touch on how different export sectors are performing and what all this signals for India's trade goals going forward. Getting these trends right is, well, it's fundamental for grasping the Indian economy today.
Okay, let's jump right in then. The big news, as you said, the U.S. is still India's largest trading partner. Fourth year in a row now.
Fourth consecutive year, yes.
Total trade volume hitting $131.84 billion. Beyond just that number, what's the key thing listeners should take away from this continued dominance?
Well, I think this four-year streak, it really highlights a sort of significant reorientation in India's trade, doesn't it? It suggests a strengthening economic alignment, particularly with the U.S.
Okay.
And what's really interesting is the momentum on the export side. Our exports to the U.S., they jumped 11.6%. That's $86.51 billion.
That's quite a jump.
It is. And it outpaced the growth in imports from the U.S., which were up about 7.44%, reaching $45.33 billion.
So that stronger export performance means the trade surplus, the amount we sell more than we buy, also increased.
Precisely. That surplus with the U.S. grew. It's now at $41.18 billion, up from roughly $35.3 billion the previous year.
That's a healthy increase. So what specific sectors are really pushing our exports to the U.S.?
Looking at the details, several areas are doing well. A big one is drug formulations and biologicals, basically medicines. That's a known strength for India, Right. And it hit $8.1 billion.
Okay. Pharmaceuticals.
Right. Then there's telecom instruments, quite substantial at $6.5 billion. Also, precious and semi-precious stones, that's $5.3 billion.
Mm-hmm.
And we're also seeing decent numbers for petroleum products, gold jewelry, ready-made garments, mostly cotton, and interestingly, iron and steel products too.
It's good to see that kind of diversity, isn't it? Not just relying on one thing.
Definitely. It shows a broadening base for our exports to the U.S. market.
Okay, so what about the other side of the coin? What are we mainly buying from the U.S.?
The top import item is crude oil. That was $4.5 billion.
Right, energy.
Followed by petroleum products themselves at $3.6 billion, and then coal and coke at $3.4 billion.
Yeah.
So energy features heavily.
Makes sense.
We also import cut and polished diamonds, electric machinery, aircraft and parts, think planes, and gold as well from the U.S.
So a mix of energy, some industrial goods, and, well, diamonds and gold moving both ways, it seems.
Kinda, yeah. Trade is quite complex.
Now, looking forward, the Indian Express mentioned a pretty ambitious target for this U.S.-India trade relationship.
Oh, yes. Very ambitious. The goal is to hit $500 billion in bilateral trade by 2030.
Wow, $500 billion. That's a huge leap from where we are now.
It is. And underpinning this ambition are the ongoing negotiations for some kind of trade agreement. It signals a, clear strategic direction in how India views its economic ties with the U.S.
Okay, so a generally positive picture with the U.S., growing trade, growing surplus. Let's pivot now to our second largest trading partner, China. The total trade volume there also went up, didn't it, to $127.7 billion.
It did rise, yes. But, and this is the crucial point, the dynamics are completely different. The headline figure you need to focus on is the trade deficit with China.
The gap between imports and exports.
Exactly. And it widened significantly. It surged by 17% to reach a really substantial $99.2 billion.
Nearly a $100 billion deficit. How did that happen?
Well, it's a two-part story, unfortunately. Our exports to China actually fell quite sharply, down 14.5% to just $14.25 billion, while at the same time, our imports from China jumped up by 11.52%, hitting $113.45 billion. So less selling, more buying. It's a classic recipe for a bigger deficit.
That really is a stark contrast to the U.S. situation. And the article gives some historical context, which is important, I think.
Absolutely. It's easy to forget, but China was India's top trading partner for several years, between 2013 and 2018, and then again briefly in 2020-21.
Right.
The fact that the U.S. has now held that top spot since 2021-22 for 4 years straight really does mark a significant shift in our trade patterns.
Now, this widening deficit with China, the article mentions experts calling it a competitiveness crisis.
Yeah.
That term sounds quite alarming. What does it mean in practical terms for UPSC aspirants trying to understand this?
It's a strong term, yes, but it points to a fundamental issue. This competitiveness crisis idea suggests we're struggling to sell enough high-value goods to China compared to the vast amount, often essential and increasingly sophisticated goods we're buying from them.
So it's not just that we're buying a lot, it's that we're not selling enough back.
Precisely. And the experts quoted suggest it's more than just a simple imbalance. The fact that our exports to China are apparently still below the levels seen way back in FY14.
Through low 2014 levels, even now.
Even now, despite the rupee being weaker, which theoretically should make our exports cheaper and more attractive, that points towards potentially deeper structural problems affecting our ability to actually compete effectively in the Chinese market.
I see. So it's not just about currency rates, it's about what we produce and how competitive it is. Okay, let's maybe zoom out a bit.
Oh.
How does all this fit into the overall picture of India's trade in FY25?
Good idea. So if we look at the total picture, India's overall goods exports for FY25 were, pretty flat. They see it around $437.42 billion.
Flat exports, okay.
But total imports, on the other hand, saw a significant rise, up 7%, hitting a record high of $915.19 billion.
A record for imports. That explains the overall trade deficit picture, too.
It does contribute significantly. However, there's a crucial bright spot: the services sector.
Yes, services.
Services exports continue their strong growth, up 12.45% to $383.51 billion. And that generates a healthy surplus, which helps to partly offset the large deficit we see in the goods trade.
So services remain a really vital pillar for our external account. Thank goodness for that. Okay, within the goods category, though, let's dig into some specific sectors. The performance was quite varied, wasn't it? Some did really well.
Very varied, yes. And it's important to understand these nuances. What really stood out? Well, coffee exports. They surged by an amazing 40% to a record $1.8 billion.
40%? Why coffee?
Apparently driven by global factors, supply issues elsewhere, higher prices, but a great performance nonetheless.
Okay, what else?
Electronic goods, another star performer. Exports jumped 32% to hit $38 billion.
Wow.
And the report specifically mentions the increasing iPhone manufacturing in India as a key driver behind that surge.
That makes sense. We hear a lot about that. Any others showing decent growth?
Yes, sectors like drugs and pharmaceuticals, which we mentioned in the U.S. context, fruits and vegetables and cereal preparations, also saw respectable growth, sort of in the 5 to 10% range.
So encouraging signs in value-added manufacturing like electronics and pharma alongside some agri-commodities. But it wasn't all good news, was it?
No, definitely not. We saw declines in some important sectors too. Gems and jewelry exports were down, handicrafts as well, and chemicals. These saw decreases ranging from about 2 to 10%.
Okay. And what about engineering goods? That's usually a big category for India.
Engineering goods were a bit mixed. Overall, for the year, they showed growth of about 6.74%.
That sounds positive.
It is, but the report noted a dip of 4% just in March, the last month of the financial year. So that could potentially signal some challenges emerging for that sector.
And the article suggests those challenges might be growing. This sounds important for exams.
Yes, I think so. The Indian Express highlights a couple of key concerns. One is the potential impact of U.S. tariffs, specifically on iron and steel and auto components.
Tariffs biting.
Potentially. Estimates suggest it could reduce our annual engineering exports by maybe $4 to $5 billion.
Ouch. That's significant.
It is. And on top of that, there's increasing competition from Chinese exporters in global markets. This is apparently putting pressure on the profit margins of Indian engineering firms. So tougher times potentially ahead for them.
So a real mixed bag then. Strong growth in some areas like electronics, coffee, pharma, but declines in others like gems and jewelry and potential headwinds for engineering. Okay, bringing this all together now. For someone preparing for UPSC, what's the core strategic takeaway from these FY25 trade figures based on the Indian Express report?
I think the central message for your UPSC prep is really about the evolving and, frankly, complex nature of India's global trade relationships. It's not straightforward.
Right.
On one hand, you have this deepening partnership with the U.S. rising exports, a nice trade surplus. That's positive.
Okay.
But on the other hand, you have this growing reliance on imports from China and a widening, quite large trade deficit there. That poses a significant economic challenge.
A challenge and maybe a vulnerability.
Exactly. It forces us to look closely at India's overall competitiveness, where our strategic dependencies might lie, and what kind of policy responses are needed to, address these imbalances.
So understanding the why behind the numbers is key.
Absolutely. Knowing the sector-specific performance, the reasons for the shifts like iPhone manufacturing boosting electronics or tariff concerns hitting engineering, that's crucial for building well-informed answers for your mains, or even understanding context for prelims.
Definitely. It's about connecting the dots, isn't it? Seeing the bigger picture beyond just the raw data.
Precisely. Which actually leads to a critical question for our listeners to think about as they process all this information.
Okay.
Considering these evolving trade dynamics, especially that contrast between the U.S. relationship and the China relationship, what do you see as the most crucial policy adjustments India needs to make? How can India strengthen its export competitiveness overall and, perhaps more urgently, address that growing trade imbalance, particularly with China?
That's a great question. Really gets to the heart of the policy challenge. Definitely something crucial to reflect on for your exam preparation. So if you found this deep dive into India's trade figures helpful for your UPSC studies, please do give us a like, subscribe for more content like this, and feel free to leave a comment with any questions or your thoughts on that final question.
We'd love to hear them.
And just a reminder, all the information we discussed today was based on reporting from the Indian Express. Thanks so much for tuning in.